So the Brunner Investment Trust is an equity investment trust that is listed in the UK, and the benchmark is 50% UK and 50% overseas equities. As things stand today, we're slightly more invested overseas, taking the opportunity to access some overseas growth within Brunner. The Brunner Investment Trust does have a relatively low weighting to the Asia-Pacific region, and that clearly has been at the epicenter of the emerging market crisis or difficulties that we've seen. And our underweight there has been a help to us. The trust is around about 2% ahead of its benchmark at the portfolio level, and about 1% at the net asset value so far in this financial year. And obviously we're pleased to be there. That said, stock selection has really driven the performance of the trust, and not really country selection, which has been quite neutral. There have been some offsets. We have had some assets, some very good quality companies that have performed very well in local currency, like Cielo or CCR in Brazil, but offset by the currency moves. So really it's been about stock selection, and that's where we like it to be. Well, I think we had fairly muted expectations for global growth in any case. We were in New York a couple of weeks ago, Lucy and I, talking about our expectations for the world in the month and years ahead. And it's very much as it was at our previous investment forum, where we expect low levels of growth as the world continues to deleverage, interest rates very low, some deflationary forces. So our expectations are not high for global growth. That said, the recent concerns around China, which in many ways have been something the market's focused on quite recently, but we've been aware of for at least 12 months, perhaps even longer, that China is beginning to slow down from a period of supernormal growth, and that has been a drag. The portfolio has been underweight materials, which has been something that's really been affected by that slowdown. That was a small help to performance, but we're beginning to see some opportunity there now. The volatility in markets has been a help, and we've added really in two areas: oil and materials, and in financials. In financials, we've taken advantage of the concerns about Asia to buy a position in the Prudential, the insurance company, which has fantastic assets in Asia, and also add to our existing position in AIA, which is quite similar to the Prudential. Oil and materials has been a more difficult area. As I said, we've been underweight there, and that has been a help. Particularly on the materials side, but we're beginning to see really the whole Chinese super cycle priced out. We're beginning to see the concerns about the low level of the oil price more than reflected in share prices of some good quality cash generative companies with some really attractive dividends. So we've started to add there as well. Yeah, we continue to believe that we have a portfolio that can produce dividend growth that far exceeds inflation. Inflation's low right now, but so is the return on other assets such as bonds and cash. And we think we can get both a high yield from equities, and Brunner already yields substantially more than cash or than most bond markets at nearly 3%. But we also believe that we can grow the dividend at least 5% a year on the underlying portfolio. What we should also add is that Brunner has now grown its dividend, the dividend that Brunner pays to its shareholders, for 43 consecutive years of growth, not just paying a dividend. And that's a fantastic track record. If you look at the statement from the chairman, you can see that the intention of the board is to continue to pay a dividend, and we think that really is very compelling. It's backed by reserves, and it's backed by a very high quality portfolio. Yeah, we have 84 investments right now. We're very comfortable with that amount. They're fairly broadly split between stocks that are listed in the UK and stocks that are listed overseas. For choice, we would bring the stock number down, but we have to do that with a view to the volatility in the market and also looking at specific opportunities. We're not going to make changes to the portfolio unless we believe they are additive to the total return and the dividend that we can pay our shareholders. So we're comfortable. We think it's appropriately diversified, but the bias is to bring the number of stocks down gradually over time.